Alrighty, welcome everybody. It is our Wednesday uh, mastermind session here on the Income Navigator group. And every week I've been trying to do something a little bit different with you. And we've had Candy on, we've had Igor on, we've had Gabe on. This week, I'm going to bring to you another special guest, one of our newer members here. And some of you have known him maybe for a little bit longer due to his YouTube channel. So we got Joseph Puckett joining us today. Sans his Elijah Craig because it's the middle of the day and he's got to do some more work, I'm guessing, for the rest of the day. So he'll save that for his nightly trading styles.
Well, man, I'm excited to be here. Tom, thank you. And honestly, I feel super overwhelmed. It's hard to overwhelm me. Dude, I live on Zoom. Like my day job is training and consulting insurance agencies all across the country. I've been in the insurance industry since 2011. The financial services industry since 2009, insurance, financial services since 2006. I live on Zoom. I'm rarely nervous, but like I feel like I'm surrounded by some awesome traders, some awesome people. I found Tom's videos last summer-ish, something like that, summer/early fall. And I started watching all of your stuff, and the 112 bear trap trade has changed my life. Like, I'm not lying. It has literally changed my life. And I'm excited to go over kind of my trading plan, and we can take a look at my accounts, play some live trades. But I have to, start by saying I'm still learning all this stuff. I started my investing journey in 2020, which a lot of people did during the pandemic. During the pandemic, we all had a little bit more time, and I started by wheeling Apple. I found the wheel strategy, and I was like, "Ooh, this is really smart." And I started wheeling Apple. What did Apple do in the last 3 or 4 months of 2020? It went straight up. So I made like $30,000. I was like, "Damn, this is easy. Like this is easy, man. I'm printing money, baby, printing money." But then, the next year, 2021, I lost all that money. I lost all that money that I made in the last few months of 2020 because I was trading like TQQQ. I'm talking about the triple leverage Qs, the TQQ or SQQQ. I was kind of day trading those. If it was going up, if it was going down, I lost all that money. 2022 is when I started selling options, doing things, but it was more on equities, SPY, Boo, stuff like that. But in 2023, I really found futures and I loved futures. I fell in love with futures, y'all. The margin, ooh, span margin's beautiful until it's not, until it goes against you. Span margin's a beautiful thing until the markets start tanking. But I found futures and I started trading futures and going just long. I wasn't even selling options. I don't even know if I could realize I could sell options. In fact, I thought an option on a future was like for 100 futures. I was like, oh my God, I can't do that. That's too much leverage. I didn't realize it was for one contract. So I started trading futures and had some success, had a lot of ups and downs. But then via YouTube University, I found how I could start selling options on futures. And I started doing that last year. The biggest challenge that I've personally had in my trading journey, before I kind of show you what my trading plan is now, and I still have a problem with this, and you know this if you've watched my channel on YouTube, the Joseph D. Puckett channel, on the YouTubes, is man, I like to overtrade. Tom and Income Navigators, you're really teaching me that I shouldn't have to overtrade to have good returns. I'm okay with risk. Like, I don't freak out when my account's down. All these people want to know about black swan hedges, and that's fine. That's fine. Y'all know how rare that is, and you know how quickly they typically rebound. But anyways, I have a big risk appetite, and that's a problem. And I've been talking about it for the past several weeks on my YouTube channel. So by me following closer to a trade strategy that I've somewhat mirrored off of what Mr. Tom does, it's helped me and it's caused me a lot less stress, a lot less pressure, whatever. But so far, year to date, I've had a really good year. Last year, I made over $150,000 in my account. It started around 500,000 or so. So you guys can do that math. I made a little over 30%. I'll show you. But I had some big ups and some big downs. That's why I think following someone like Tom and Igor and Candy, having a trading plan is going to help people like me not overtrade because that's my biggest problem. My biggest problem is averaging down too quick and getting into too big of positions and digging a hole, which I always dug myself out of. But the volatility in my counts really lost me sleep. It cost me sleep and it added stress to my life. Income Navigator, Tom, Igor, what they're doing, selling strangles and 112s and being less directional. Now, I'm totally okay being directional. So that's where I might differ a little bit. I love the wheel strategy. I love wheeling, and I'm wheeling ES and gold in my main trading account and in my main IRA. I'm okay with some directional risk. I'm okay even averaging down. What I have to do is control myself. I have to control myself and not go too crazy too fast. You know what I do know over time? The S&P is going to go up. Could it be down for 3 to 6 months? Shoot, could it be down for the last 2 years? But it wasn't down the last 2 years. We just hit the first all-time high in over 2 years. But there's been ups and downs all along the way. So selling options around it, puts until assigned, calls until called away, I mean, just getting all that premium in just really attracts me. So that's where I might be a little different than some of the traders on the Income Navigator service. Is I'm okay with more directional risk because I'm okay with risk. I don't mind if my account's negative for the day. It doesn't freak me out. What I find is a lot of traders freak out if they're down like $5. I can be down $15,000 and not sweat. Hey, I might lose a little sleep, but I know it's going to rebound, and I'm selling options around those positions. But here's my promise: is I'm going to stick more closely to an actual trade plan, thanks to Tom and his influence. He's really taught me from all the videos that I've watched and everything that he's done that I don't have to be so active to make a decent amount of money in the market.
I think
But if you're cool
too,
with it,
when
yes,
we
sir.
first
Yes,
talked,
sir.
yeah, I think when we first spoke by phone a while ago, I think the first thing I told you was, "Man, I'm actually scared for you." So,
Yes, sir.
uh, I think you're a little.
And I hear you.
I think your buying power is a little much. I'm actually a little nervous for you, but I'm going to let you keep going here today.
Yes.
One of the reasons, I wanted to bring Joseph on here, and Igor and I wanted to have him part of the service. We'll talk a little bit more about that here in a bit. Is hey, we want to make sure you have variety, and the key to I think being successful in trading is finding those strategies that fit your style and your personality. The 112 is great, but and there's strangles. You might like that. You may not like strangles. Some of you like strangles. Some of you don't like strangles. Some of you might like. I used to do a covered strangle trade. Some of you like that and are still doing it. Some of you like ratio spreads. If you want a wheel, you can do the wheel. You can do whatever fits your trading style. And one of the things I wanted to make sure we do is keep exposing you guys to. We're all similar because we're all premium sellers, and I think really at Income Navigator, that's we're generating income. We're primarily premium sellers here, and I think that's a great way of trading, and that's really the core thread that runs through everything that we do here. Is a lot more premium selling. Doesn't mean we won't buy some butterflies or buy some trades or buy some other things. And if you want to trade stocks, you can. It's just not my thing. But anybody can do. You can do whatever is comfortable to you. The key is to expose yourself to as many different types of opportunities that are out there, and then find what works for you. And I think one of the cool things that Joseph's done is he's bringing you some different things that you don't hear from us, that we don't do. And I'm not saying that I would trade it or I wouldn't trade it. He's got me interested in wanting to do like one or two of his trades, but it's not in my trade plan yet, and I'm trying to hold true to myself here. And I don't want FOMO with Joseph popping up his big trade wins on me and me wanting to do his trades. But you guys got to figure out what's right for you. And I know some of you guys want to be a little bit more direct. It's okay to be directional. And especially when the markets are in the mode that they are right now. Okay, being directional is good as long as you have a plan for it, and as long as it fits your style. What I don't want you to do is take your plan, throw it out the window because now I can be directional because the markets are going up 30, 40 points every single day, because in the next 2 days, maybe they go down 50, 60 points and they do that for a week or two or three, and now we're down to 5, 6, 7%, and you wish you hadn't become a directional trader. But you can play directional on the way up. You can play directional on the way down. So I think, Joseph, one of the things I wanted to jump into first with you is, and I'm going to let you, it's your show today. for the most part, is let's go through your trading plan a bit, talk about the different style trades that you have on and what you're doing, how you're managing them a bit. And then if you can rock it, you go through that. You can post it up in the Discord, and I know you've got it in some of your videos on your YouTube as well. So people can follow what you're doing here. But again, he's got a plan. He's adhering to his plan, hopefully. And he's going to modify that plan as he goes, and like we all do. But we'll get some trades on after this. So go ahead and jump in on your plan.
Yes, sir. You got it. So I did not have a plan last year. And it hurt me. Um, I hope this doesn't make me lose credibility, but y'all, I don't think we just need to see the good. We need to see the bad. Let me show you my 2023. The end result was great. Look what was not so great. This was me trading too big. If you're watching this out there and you're trading too big, trade small, trade often, which by the way, I learned a bunch from Tasty, but I don't really follow a lot of what they do. But trade small, trade often. Y'all check this out. Made 100 grand, lost it all. Made it back within days, y'all. Lost more than that. Then end of the year, good. This is what it looks like when you don't have a trading plan. And this is embarrassing to me to share in front of hundreds of people, thousands potentially watched on the YouTube. But I'm hoping that this year will be much more smoother. But take a look. I started the year bad, over trading NASDAQ. My first week was bad, but then it rebounded and went up. So that's when I decided to publish an actual trading plan that I'm going to work so hard to stick to. Now I'm giving myself a little bit of wiggle room. Y'all, I love day trading. My problem is over trading and digging too deep of a hole. So I'm giving myself a little bit of wiggle room to do some scalping on the ES, NASDAQ, and crude oil. I like those futures. By the way, sometimes it might be going long the future. Sometimes it's just selling options around it. So if the market sells off overnight, I see the MACD starting to turn the right direction, I'll sell a put and maybe take $100 out of it, something like that. Or I might put on my big boy pants and just go long the future if I believe it's going to go up. I'm not a huge fan of shorting. I don't like shorting markets because in my mind they just always go up. But I love reversals. I love reversals. So I give myself a little bit of wiggle room to trade up to 4 long futures positions at a time. But this is my wheel strategy. My wheel strategy, and this is very aggressive for some of y'all, I'm guessing, especially if you follow a lot of what Tom and Igor teach. By the way, I'm not giving any financial advice. Don't do what I'm doing. I have no clue what I'm doing. Don't copy me, but I'm sharing you my journey, right? I like the wheel strategy plus covered strangles. I call it selling options on steroids. I go 0 to 2 days out, especially on gold, because sometimes gold might be 2 days out. 0 to 2, hold on, let me update that. 0 to 2 days out, I sell an at the money put. I saw an at the money put 50 delta, and it collects a ton of extrinsic premium, a lot of premium. If you want to go out to the 16 delta, the 7 delta, that's fine, like to start a wheel strategy. But I want to get as much money as possible up front. And then I start selling covered strangles. Once I'm assigned, I start selling 1 to 7 DTE cover strangles. Really, I'm gonna stick closer to 7 DTE. That puts me further out of the money on both sides, puts and calls. But I love covered strangles. It's kind of like the best of both worlds, right? You're getting the appreciation of the market. If it goes down, but not too far down, well, then you're just collecting all that premium. If it goes far down and it passes my short put, then fine. I'm okay taking assignment of another contract until I've up to 4 on ES and gold on an account my size. Y'all, I'm trading like a $600,000 plus account. If you're trading a $40,000 account, don't you dare do this. Or if you want to do this, do it with like MES. Or, well, you can't sell MGC options on Tasty, but MES or MNQ, something like that. But that's just me. I love covered strangles. And this is a weekly trade. It's a daily trade until assigned, then weekly. And I'm okay holding up to 4 long contracts. All the while, keep selling calls, keep selling calls, keep selling calls, and just collecting tons and tons and tons of premium. I do make sure that all of my calls sold are at or above whatever my cost basis is. So if the market's gone down a bunch, I might not get a lot of money for those calls for a few days or even a few weeks. And I've been there, done that. But that's my wheel strategy, covered strangles. I really call this my selling options on steroids. This is very directional. And if you do not like your account being down even $1 for the day, don't you dare do this. Keep selling far of the money strangles, keep selling 112s. But this is me wanting to take on a bit more risk. But a majority of my trades are going to be well learned from my friend Tom at Income Navigator. And y'all are not new to this. The 112 Bear Trap, I think, is literally the best trade God ever made, right? The best trade in the world is the 112 Bear Trap. I could literally just see myself just doing this, just selling bear traps on. I like these markets. I like, why does it keep showing the link? I like ES. So now, I mean, S&P, NASDAQ, crude oil, and gold. I was doing bonds in Russell, but I don't love 112s on Russell. The strikes aren't very good or whatever. So I've still got some cooking. Really, I'm just going to let them expire. But those are the four markets that I'm trading. And then I did some math. I did some math here. Now, this is nowhere near as good as Mr. Tom's amazing spreadsheet. Okay. Like, I kind of want to download yours and like make mine better. I just haven't had the chance. But I ran some numbers. So here's the types of credits I'm looking to get on the ES and GC when I'm selling those 0 to 2 DTE short puts, amount of buying power, max positions. I'm okay having up to 3 7 DTE cover strangles in those. What would a likely credits be? But this can vary, right? This can definitely vary, especially if the market's falling. I might not get much on the call side, but 16 delta calls and puts, or just remember my calls have to be at or above whatever my average cost basis is, about how much credit I'll get. And I'm okay having up to 3, some maximum power. But as you see, a majority of my buying power I'm putting towards Tom's 112 Bear Trap, and I'm doing Monday, Tuesday, Wednesday, Thursday. So today's Wednesday. I need to place a crude oil 112. I like 60 to 90 DTE. I understand sometimes we might want to go a bit longer term, sometimes a little bit shorter term. I like 60 to 90. And these are where I put my long puts all at around the 25 delta, which I learned from Tom. Like, all of this is Income Navigator. Okay. This is not Joseph Puckett. But I put my long put around the 25 delta. I like 25 to 50 points spread for the put debit spread on the ES, 100 to even 250 points on the NASDAQ, 1 point on oil, and 10 points on gold. And then I put my short puts at the 5 to 10 delta. Honestly, this might also be where I'm a bit more aggressive. I've had some people say, JP, you're a little bit more aggressive on those 112s, because I like 7 delta, maybe even 10 delta. I'm okay going a little bit higher delta on my short puts. So that's what I'm looking at. The types of credit I'll get every week, around $3,100 a week. I got that over here. I'm only assuming that I'm only going to have 2 of my 0 to 2 DTE short puts expire weekly. And I'm only assuming 2 cover strangles monthly. Really, these numbers are probably low. I'll likely receive a lot more credit over time on these strategies, but I'm just trying to be conservative. And then gold strangles. Tom taught me back into strangles. Y'all, I got so burned on gold last year. Here's my problem, especially with Tasty. And by the way, if they're watching, I'd love to be on your Rise and Star statement one time. What's up? But I don't like adjusting. And I've heard Tom say he doesn't like adjusting either. I got whipsawed. I got so majorly whipsawed last year. In every market, I tried to do the whole adjusting thing. Roll up the untested side or roll down on the untested side. And then it goes the other way. And then I got burned. So I got scared of naked calls in particular. Naked calls killed me last year. Honestly, y'all, because I was trading too big. Please, if you learn nothing else from me today, trade small. Okay. Whenever I got myself in trouble, it's because I had like 15, 20 strangles on when I should have only had 5 or whatever. I just traded too big. But then I would adjust the other side thinking, oh, look how smart I am. And then it would reverse and go the other way. So I got killed on those. So I've been kind of scared of naked calls. But Tom strangles on gold, on 6E, on copper. He's getting all fancy now with copper and other things. It got me wanting to try gold again because I love gold. And you'll see that in a minute. I'm hating it right this minute in my IRA, especially, but I love gold. To me, you can get a lot of premium. Gold is not going to 0. And gold certainly also not going to go to 1,000,000. Okay. I like gold, how it kind of trades in a range. So that's my trade plan, y'all, for my main trading account. For my IRAs, my main strategy is wheeling and covered strangles on MES. Yes, I'm starting to play some 112s in my IRAs for my wife. But in my main IRA, I'm just wheeling MES, micro ES, because the margin required in IRAs is like 2x, right? It's like 2 times what it is in a normal account. And I'm also doing wheeling gold in my main IRA. And as you'll see in a second, it's hurting me today. It's hurting me today a little bit, but you know what? I'm not feeling too bad about it. If we can now, let me go to my Tasty Trade. And I figured out how to do the privacy mode thing. So it hides my account numbers. I wish it would show my total net lick, but at least it shows my buying power and stuff.
Yeah, it's always
Let me
the
do a
problem.
new share. Yeah, like I have to like block it out when I do my YouTube videos. Where's my tasty trade? I've never shared tasty via Zoom. Okay, this is my tasty trade. All right. So here I am. Here I am, year to date on all of my accounts. As you see today, I'm down in my IRA. This is my IRA. I wish it would at least keep the name, but whatever. This is my IRA. It's about 40,000. This is my wife's IRA. It's just under 25,000. This is my main trading account. I don't even know what it's at. What's it at? Like 650, something like that. I wish I could see the balances, but whatever. Um, let's go ahead and first take a look at my main trading account and let's see if I have any puts to take off. Now, what I didn't talk about in my 112 bear trap strategy, and this is a little different than Mr. Tom. All right. And Tom, tell me if I'm wrong. Tell me if I'm wrong. And a couple months ago, though, dude, I commented this on your video and you liked it. So I don't know if that means if you agreed or not. I am totally fine, me personally, taking off the short put as a part of the put debit spread. I'm totally fine taking that sucker off, which means that
I've
the
been doing
long
it.
put, you do that too sometimes?
Yeah, I've been doing it. I've been
Okay,
doing it a
good.
lot more lately, especially with the markets being at these highs. I'm closer to about 97, 98% on them when they're down to about 100, $200.
Take them off.
Take them off and I leave them on. Usually right now I think I've got 5 of those on. And you get a much higher long put that's a good hedge for $200, is what you're buying that put back from me. I somewhere around 150 to $200 is what I buy it back for. No, I like that.
Beautiful.
I like that strategy. I like you're doing it. I'm doing it as part of my trade plan now. So I think it's a good way to go. Is just you can take the naked puts off. You can take the short puts of the PDS off, and now you've got 2 long or however many contracts. You've just got a kind of a black swan hedge. And normally you take those off with at least 30 days to go, usually for me. Now you're trading shorter, 60 to 90. So I don't know what the time frame it takes for you to get to it, but yeah, you
Well,
get
let's take a
at least
look.
30 days left, usually,
Yeah.
25 to 30 days left.
And I'm also okay taking it off a little bit before 95% profit. Like you're saying, a couple $100 credit. We've got some chats here. Bottom line, I just love getting paid to have free long puts. It's pretty cool, right? I don't like buying options. In fact, I've never bought an option to open a position. Now I want to Tom just send in a chat. Tom R just in a chat. 54,000 year to date on 600 net click is a huge return. Yes, but Tom, it was because I was over trading, man. I got to be honest with you. You can see on my videos, I share everything. I share my wins, I share my losses. I was over trading NASDAQ in the first week of the year. It rebounded beautifully. Now I'm up a ton year to date on NASDAQ. That's nice. Then in my second week of the year, y'all, I stuck to my trade plan. It was a smooth week, great week. You know what I did in the third week? I dug a freaking deep hole in Russell and bonds. So please don't pay attention to this. This is probably 2 times what it should be. This is probably 2 times what it should be because I was over trading. But I just got to be honest with y'all. I can stomach risk, but that's just me personally. If you're 78 years old out there watching this and you need all this money for retirement, don't do this stuff. But I'm 39 and I make good income and I'm okay taking on more risk. But let's go ahead and see real quick. Do I have it? And please rebound oil. Y'all, we need a nice little spike in oil. It's killing me in my IRA today. You know why? Because I traded too big. That's all. That's my problem. But I'm okay with it. I'm okay with it. We'll look at that in a second. Let's look at my 112s and other strategies. So this is kind of neat. Last night, when the market reopened at 5 p.m. Central, I'm Central Time. I'm here in Alabama. If you are wondering where this accent's from, roll tide for anybody out there that likes Alabama. Last night, I sold an at the money 1 DTE put, brought in about $450. I closed it this morning about 6 a.m. Realized 312. I went ahead and rolled it up because the market jumped big overnight, right? So I rolled it up. I sold a 0 DTE put on the ES 49.15. It's about 7 points away. Look, it's come down a bit over the past several minutes. We'll see what happens. I'm not going to take this off though. If it expires around this strike and I'm up almost $400, I'll probably just close it. And I love how Tasty makes it so easy to close a position. But these are working, right? Just those 2 trades today. Well, let's quickly skim to see if I have any short puts as a part of my put debit spreads or 112 bear traps. Like if I have any nakeds, they're at 91% or better. I kind of like to close them at 91% or better versus 95. That way I can free up that capital and just move on. Doesn't look like I have any. Oh, this one's close. My oil's close, y'all. It's getting close. Both of these. See, This is where I'll be okay taking this one off, right? Which then means I'd have a much bigger tent on that remaining ratio spread, the 1x2 ratio spread. That long put would print tons of money if it falls, but it's not there yet. Do I have any that are 91% or better?
I think that's a good one to point
Ah,
out.
yes, sir.
Too is you don't have to wait. There's been a couple of mine that have happened that way, but you don't have to wait on the put debit spreads here for the naked puts to come off at 90 or 95 or whatever the heck you're doing. You can, if you take those shorts off at 95% or 90% or whatever you want to do, I mean, make sure it's your plan. You've just turned it into a giant ratio spread
Yes.
until you take those puts off, which has created a really large tent for you and freed up a little bit of buying power in the meantime. So it's a pretty cool little adjustment to do. I like the adjustment. I've been closing mine, but typically my nakeds come off before the PDS ones. But if you want to lower your threshold from my 95, 97 to, Joseph's like 90, 91-ish area, fine,
Mhm.
you're going to take those off earlier and you could create a really big tent.
Yes, sir. Check this out. This oil contract is trading what around 75. It doesn't tell me here. Um, so this is my 112. I brought in $520. If it falls in the trap, $1,500. Watch what happens when I take off this 64 short put. Boom. Look at this tent. $9,000 max profit if it ends there, or it can go down further. I'm still making more. I'm still making more, still making more, still making more, still making more till around here. So that's why I'm totally cool taking off this short put a part of the debit spread. Right. Ooh, look what Eddie said. Fat ass trap.
So
Eddie, I like that.
Eddie's doing these,
I like
and
that.
Eddie's a giant
Okay. Ratio spreads.
Eddie's a giant ratio spread guy. He
Love
loves
them.
his ratio spreads.
Love
And I
them.
think as you start to work through this, guys, and Eddie's a contributor here, so you guys can follow what he's doing. He's doing similar stuff, but everything's a kind of a version of a ratio spread eventually,
Yeah.
depending on how you move things around here. But that's a cool adjustment. I like it. If you want to be a little bit more aggressive, take them off a little bit earlier, especially if you think we're topping out or something like that. You give yourself a big trap. So yeah, the fat ass trap is as you guys posted there. It's a pretty cool little adjustment that gives you a really good hedge.
Yes, sir. Here is me doing some 0 to 2 DTEs on gold. I love gold. So look, this one I sold like yesterday. Yeah, yesterday. I got the whole $430 for it, even though gold's fallen. What I did was I just took it off and I rolled it down. So I rolled it down 10 points. This one expires on Friday. So this one was for this Friday. I made $430. I took 10 points of risk off the table and sold another one for $660. $660. So I like shorter dated stuff. My biggest problem over the years, the past few years, has been over trading. So I just want to point that out. That's what I'm doing on gold and ES. Everything else is all 112s. And Russell, y'all, I was in the Russell trap the other day, but look where they're at now. Right? They're in like really good shape. I was actually kind of hoping some would expire in the trap, and maybe they will. We're only 10 points away there, 10 points away, 85 points. Like that's probably not going to happen. But Tom's 112 trades, this I could literally see myself just doing every day, every week on multiple underlines to be diversified. And I could see myself finding financial freedom from 112s alone. I just also like directional risk a little bit and some 0 to 1 TTE stuff, getting more extrinsic value a little bit here and there. Now let's take a look at my
And
IRA.
Kevin, this is right up your alley, man.
I'm sorry.
Kevin loves to juice it up, man. So this is
Yeah.
if you want to put a little bit more risk out there, and if you're in the Discord that you guys want to put a little bit more risk on because you have a little bit of that riskier appetite,
Yeah.
knock yourselves out. Just know just know the trade before you get into it. But this gives you a nice a little bit more risk, and I feel you got to juice it up, but you could do 112s to till the cows come home. But to me, I want to add those strangles, those ratio spreads, some naked puts or some covered strangles. I'm always
Mhm.
adding something in there because in order to get to closer to my 3% a month or so, you can't just do it only on 112s. Typically, you're going to have to do something else on it, or you're going to have to be more aggressive on your 112s. And Joseph, he goes a little higher on the naked puts, which is totally fine. again, what is your risk appetite? What do are you willing to take assignment? Are you willing to take a little bit more heat? And if you are, because it's not a lot easier to do that in a bigger account, to take a little bit of heat. And when you're confident that you can make it back, okay, I think one of the best things is to get clobbered in your account, like Joseph
Yes.
did last year, and then turn it around and not only get all of that loss back, but then double essentially or 1.5 times the amount of loss to the upside. Okay, once you've done it once, you know you can do it again. Okay, but you don't know you can do it until you've lost it significantly once. I'm not saying you should try to lose it once, but you got to get clobbered once,
Mhm.
and then wheel it and move it back so that you know that you can do it again, which is why I'm not super fearful. I hedge, but I'm not super fearful because if I lose a giant chunk of the account, I know I'll get it back. I won't, maybe it takes me months to do it, but I'll get it back and then I'll be way ahead later on.
You just reminded me something, and I need to remember this. I'm going to make a trading journey video once my reports come out. I think Tasty said that the 1099 is going to be out by the 31st or something, or is it February 5th or something? I'm going to make a video showing my actual 1099s from the past 3 years. So 2021, 2, 3, no, 4 years. I'm going to pull my 1099s, black out my Social Security, and I'm going to talk about my journey. But you know what you just reminded me of? Y'all, I first started trying to day trade when I was 19 years old. This takes me back to Alabama. This was in like 2003-ish, 2004-ish. I had a little bit of money. Honestly, my grandparents passed away and they left me some money. You know what I did? I pissed it away in the damn market. But by the way, I didn't do it by myself. I got my dad to give me 20 grand. My brother gave me 20 grand. I didn't lose all their money. Honestly, I just ate the loss myself. I gave them back 100% of the money that they put into my account, which by the way, I didn't realize that that was not good. I guess I was being like a registered advisor without being a registered. I was 19 years old, y'all. I got me 3 monitors, right? 3 monitors attached to my old PC. This was like in 2004, I think. Long story short, in about a month, I lost over $25,000 of my money. And there was one day, Tom, and I didn't know what I was doing, man. I was just buying stocks. There was one day I was buying this penny stock or whatever, like an idiot. But didn't we all try that at one point? And
Huh?
man, I got sick. Like I don't want to make y'all feel weird on this call. Like hopefully nobody's eating lunch. I literally got sick to my stomach. And that was the day I liquidated everything. I emailed my brother and I emailed my dad. I said, "Hey guys, I decided not to do it. I lied. I've never told my dad this. I lied. I said, y'all, I'm too busy with schoolwork, whatever. Hey, I'm just going to send you your money back." I lost all of mine, all of mine. So, yeah, man, I've been there being down big, but I've also seen big rebounds. I've also seen big rebounds. And what I love about selling options around positions is you're collecting all that premium while you're waiting for that rebound. But you have to be able to stomach that risk. Some people can't stomach the risk. Well, let's take a look at my idiot self doing against my trade plan. This is me and my IRA. Gold. Damn it, gold. If I look at my year to date, if I look at my year to date, my IRA, look on this gold contract, I'm up 655, but it expires like that stops trading. There's only like one more day. Was that tomorrow? So I went ahead and opened a 0 or 2 DTE short put last night when it was at the market, or excuse me, at the money. I averaged down this morning and I was really hoping this rebounded before this call, but I guess I'm glad that it didn't. So I'm now short to 20, 40, 50. I mean, it's only 20, 45. It's only 10 points away. But y'all, this is way too big for an IRA. This is me still having a problem. This is me saying this is why I need Tom King, Igor, Candy, and Income Navigators to tell me Joseph stick more to a trade plan. But y'all, am I worried about this? No. If I get assigned these on Friday, just please give me a nice little bounce while we're still recording for the next 20 minutes. That'd be really nice because I'd love to just get out of this, but whatever. If I end up getting assigned these, you know what I'm going to start doing? Selling calls, selling calls, selling calls, selling calls, selling calls. And I'm going to make hundreds to potentially thousands of dollars. But this is just me proving that I'm not perfect. Please bounce. Give me like 10 more points and then we'll be good. But this is my IRA. Y'all look at my wife's IRA. I wish it had titles. This is my wife's IRA. It's about 25,000, a little less than 25,000. Y'all, her year to date is way better than mine. You know why? Because I'm taking less risk. If I would just take less risk in my own IRA, I'd have a better return, but I'm okay stomach it. There's just something about my wife's account, which by the way, every penny I've put in, she hasn't earned a paycheck in 12 years. Thank God. I'm thankful and fortunate. She's been able to be a stay at home mom and taking care of our family. And she helps me a little in my businesses and stuff too. But I don't want to mess with her money as much as I'm willing to mess with mine. Isn't that weird? Isn't that weird that I'm willing to take on more risk in my IRA, which is this middle account, than I am my wife's? And look, hers has done better than mine, and it's like almost half the size. So let's place a quick 1-1-2. I know y'all want to see a trade because I love watching trading. I love people watch trades. So today is Wednesday, which per my trade plan means I need to place a 1-1-2 in oil. And if you look at my capital requirements on my, oh crud, which one is which? Nope. Is it this one? Oil, I'm light in. I'm light in oil. So I might even place two right now. I might do a 2-2-4. But today is oil day per my trade plan. So I need to get some buying power rocking. And yes, my buying power is really low. Somebody mentioned that earlier. In my main account, y'all look at my IRA. Am I being an idiot right now? Let's go oil. Well, excuse me, gold. Let's go gold. But anyways, today is Wednesday, which means it's oil day. And I love oil too. And I like 60 to 90 DTE. As you can see, I've already got some trades cooking here. And a lot of these are so close to being able to take some short puts off. Oh my God, this is like the perfect one, but that's a little under 60. I wish I had more strikes for oil. Ah, shoot, I already have too many on there. But I mean, look how far these have fallen. And at some point soon, I'm going to be able to take off some of these short puts. You know what? This is a little outside my trade plan, a little bit sooner. But look, I've got plenty of room to go on this 51 DTE. So let's do it. I like to start around the 25 delta, but also prefer whole numbers. Let's go to 69. I like a 1 point wide. Tom, is this different than you? Do you do half a
No,
point, one
same
point,
thing
two
on
points?
oil. Yeah, no, it's
Okay,
more.
same thing.
I
So
usually
I
use
like
about
one.
1% of the width, 1% of the size of the underlying as a rough guide. So
Nice.
it's an easy way to
Smart.
think about it. So, with oil trading around 75, 1% is about 0.7. So you really go one wide.
You just taught me something. So that's why you like the
It's a
50
good
point wide
starting
on
point. It doesn't mean
ES,
you have
because
to.
it's about 40 points. Around 40 points on the ES will be 1%. That's really smart. And I'm okay doing 7 to 10 delta or 5 to 10 delta, but I really tend to stick around the 7 delta. So and I don't like half numbers. So if I sell two of these, this will bring in a credit of around $500, a little less as I have to take it around minus commissions and fees. But look at that beautiful max profit being an extra $1,000. Now, if this isn't good for your risk tolerance, you want to take it down to 5 delta or so, that's fine. I just want to bring in more money on the front end, and notice that the max profit's still just $1,000 more. So I would probably do something like this. Let's take a quick look at the curve. Let's see. I don't normally do this. How do I do this? Orders. There we go. Is this right? Yeah. So we're trading at, where are we trading? Wait, hold on. Can I zoom
You
out?
just zoom in. Yeah.
Yeah, there we go. So we're trading like right here. So I'll only make around $500 minus commissions and fees, minus having to take it around a little bit. So it might end up around 480-ish. But look, if it falls, around this one standard deviation, $1,500 profit. Y'all, this is the most amazing trade I've ever seen. And I just want to thank Igor and Tom for y'all's YouTube videos. You've changed my life. All right. Now let's go ahead and place the trade. I wish we could do these at once. Didn't somebody say at some point they're working on these advanced types of orders for futures on Tasty? I don't know. I thought I heard somebody say that.
Yeah, they're always working on it.
That's what they always say, right? Yeah, we're working on it. All right. So 61
Maybe
put,
this
let's just
year.
remember 61 puts. So let's go ahead and buy this put debit spread for around $780. I'll leave it at mid price. Let's get that working. I'm going to sell two short puts of the 61s. It's about a 7 delta, bring in 720. I hate letting this sit and watch. Y'all, I'm not going to let $10 escape me. So guess what? I'm just going to take it up 1-7. Wait, am I doing the wrong way? No, this is the right way. Boom, baby. That is a 51 DTE. And I love now that we can label these. Which one is it? Hold on, sort by symbol. Here we go. I love that we can now label these. Tom, this is the way that I like to do them. I just like to put the original DTE and then what it is. 51 DTE 112 on oil. You label yours a bit differently.
I just use the date, but the date's already
Date.
there. So yeah, you can put the original DTE. It's all good.
Perfect. There we go. So I just placed my 112 on oil, and that's it. I've got on my main trading account. Let me resort this by days to expiration. I've got my 0 to 1 DTE short put on ES working. That's part of my wheel strategy / cover strangles. I've got the same thing cooking on my gold. Notice a little bit lower strike price than my other. Let's see what happens. This is for Friday. And I just placed my 112 on crude oil. I should technically be done for the day, except from time to time, maybe look and see if I have any short puts that I can take off that for me. Oh my God, this was so close. Y'all, is that close enough to take it off? That's as close to 91% as I've ever seen, y'all. It's 90.9. Hell, I'm gonna take this off. I'm gonna free up some buying power. Watch this, y'all. So I'm gonna go ahead and close this. I'm gonna realize a profit. Shoot, I'll leave it at mid price. I'm just gonna put this order in. Is that good to close? Yep. There we go, baby. Maybe in the next few minutes, I'll have some buying power freed up because I just took off some of those puts, which decreases some of my downside risk. I don't know how long these typically go. I don't know if there's anything else I need to share or show. Y'all, can y'all say a quick prayer for gold for me and for my IRA? But with that said, I'm happy to answer any questions. Please keep in mind, I'm
Yeah.
just a student, just like all of y'all. I do feel like I know a thing or two. I have made thousands of trades. I've made plenty of mistakes. I'm so excited to be able to share. I'm curious if y'all have questions or if there's anything else, Tom, that you normally go over. I'm just here to be here for anybody or for anything.
So a
What you
couple,
got?
we'll let you guys post some questions in chat. And one of the things we're going to do is Joseph's been posting his trades in our Discord. He's been in the member trades. We set him up like just a little thread. We're going to move him out of there though. You have now Joseph, and you don't probably haven't even looked because you don't know. But we set you up as with a contributor with your own little channel, like Stacy and Eddie have, so you can create as many sub threads as you want from that. So you'll be able to follow Joseph in here. Typically, one of the things we'll have Joseph do is he'll post his trade plan, maybe put that in a separate little thread, and then as you post your trades, he may post some live. He may throw some videos on. Bear in mind Joseph does work during the day, so he will do his best to post and keep up live. The key here is same with my trades, Igor's trades, Gabe's trades, Eddie's trades, Ace's trades, Candy's trades. Doesn't really matter who it is. It's not the fact that we want you to jump in and follow exactly what we're doing. What we want you to do is see what we're doing, understand why we're doing it, and decide if this is right for you, and then formulate your own plan. So whether you watch whether he can get him live or not, I mean, typically he's going to post live in his YouTube. He'll do it more in the evening because the great thing about futures is that you can trade pretty much around the clock. So if you're working a full-time gig like Joseph's doing, took a little bit of time out of his day today to spend with us here, which is great. And then when he gets a moment or two, he can jump in and post some things or drop a video there. You guys can follow him on YouTube as well. So you can go to his YouTube, and he's got his YouTube videos in our channel there. So you can always just click on one of them and go and subscribe and just hang out in his channels there. Okay, but watch what he's doing and get a sense of it. He'll trade when he trades, whatever those times are. If those times don't mesh with you, it's all good. Just try to get a sense of what's he doing, what's his trade plan like, and why is he doing that particular trade. You don't need to mirror his trade. What you need to figure out is that strategy something you like? And then you want to watch him and follow what he's doing. Great. When does he get in? When does he get out? You're going to be close. I mean, it's not like if you miss a trade by 3 or 4 hours that it's going to have changed significantly. Now, sometimes it can, but usually you're going to get a good idea of what it looks like. The one thing I really like about Joseph's plan here is, as much as I trade 112s on oil and gold, and I've got them on copper and everything else right now, and I've been doing it more and more and more, is ES is not my major. When you look at the capital requirements on Joseph's screen right now, just click on your main trade account at the top to highlight it, so we only get your trade account one. So just go all the way to the top and just highlight only your trade.
Oh, just this one. Okay, yeah, I got you. Yes, sir.
All right. So look at the capital requirements here. And this is what I like. If you look at mine as well, too, it's going to be not quite the same, but look at it. So ES is not where his largest bulk of his money is right now. So he's got more in gold at 67. Now it doesn't, from a capital standpoint, he's got a decent amount in oil. He's got a lot in NASDAQ. right now, and he's got a decent amount in RTY. Now, RTY, so Russell, NASDAQ, and ES are all correlated for the most part. At least NASDAQ and the NQ and the ES are going to be very heavily correlated. Whatever one's doing, the other one's probably going to do. Russell, kind of correlated with it to an extent. And then oil and gold, and not so much. So it does give you nice diversification by underlying. So whether you're doing 112s here, which he's putting on a routine basis, he's spreading it out along that. If you look at my account too right now, I have 67,000 in buying power in ES. I have 52,000 in oil. And then I have gold, copper, in the NQ as well. So I'm trying to spread it out a little bit more. He's just done a really good job of it. I've been too heavy, I think, in ES. And a lot of those are the BA 112s and some other crazy 112 trades, not just the long-term 112 trades that we do. But I think diversifying around more underlyings here gives you some more exposure to different things, but less exposure overall to what the ES is doing.
Absolutely. See a question here from Lou on the 112s. How often do you move the short put on the PDS first? Honestly, I just do it once it hits 91% or higher. Now, as you just saw, 90.9% or higher. I just take off that risk, and I love that remaining ratio spread. Tom, I don't know if Eddie does this or if anybody else does this, but I learned about the Batman trade last year. I've really thought about doing double ratio spreads. I love the Batman trade, how it makes those two tenths,
Yep.
right? You got the nice credit in the middle, and then those two big tenths. Calls scare me. I got burned so many times on short calls last year, but I'm thinking about potentially trying out a Batman trade, which is two ratio spreads, one on the put side around the expected move, one on the call side around the expected move with a nice, big, beautiful tent. But that's me, Lou. I'm totally fine taking off the short put that's part of the debit spread, which then gives that huge, beautiful ratio spread tent. It's a gorgeous, beautiful tent. Vicky, can you share your NQ trade? Well, on NQ and on Russell, you might be like, JP, you made a lot of money in those this year. They were also down a lot. This was me over trading. This is my problem. Seriously, I'm just being honest with y'all. I was selling puts, and the market would dip. I'm like, hell, I'll sell another. Then it dip and I'll sell another. But at least I collected all that premium. And then I was assigned like 15 to 20 contracts each. They were each different weeks. NASDAQ, I got in trouble in the first week of the year. Russell was the third week of the year. But guys, what did I do? I just kept selling tons and tons and tons of calls. All of this money is from the premium that I sold because I was selling my calls at my basis. Does that make sense? But this was trading too big. So I don't want to show you what I did in NASDAQ because it was wrong. It was too big. I was just selling too many puts.
I think one of the keys in NASDAQ here is maybe just how do you set up your 112? Maybe that's a question. I don't know. Yep. I love NASDAQ as a 112. You get really, really far out. You get, I like to do about 250, so 200 to 300 wides. Typically, you get pretty far out on the nakeds. But it's a pretty good sized trap, at least 200 usually, and then you're usually pretty far out on them. So if you was setting one up, you don't have to place the trade. Just how would you set up the NQs? And I like it. Yep. The only thing is NQ is a big BP trade. It's a big boy trade, and if you don't have a pretty good size account, I wouldn't be trading it.
Yeah, I like 60 to 90 DTE because I find that the shorter dated options expire a lot quicker, like it's data decay, right? So if I were doing this today, I kind of like 100 point to get more credit initially, bigger trap, less credit initially, but much bigger trap. So this is what I would do if I was doing 200 points. Around the 25 delta, you know what, let's take this down. That's still 200 points. So 25 delta, long put, 100 to 200 point wide, maybe even a little bit more, but this is what maybe Tom would be closer to doing. Short put, and then they would likely do around the 5 delta, 2 short puts. I am a bit more risk tolerant. This is my trade. I like the 7 delta short puts. So I bring in about 1,300 if I go to curve analysis. Oh, this is the problem though with NASDAQ. Like you can't even see it all.
No, you can't get it all on one screen.
Yeah, you can't even get it all. Oh, shoot. Let's see here.
You can hit those little 3 dots on the left there, down below the bar, and it'll jump over to where the main trade is. But
Oh, these?
yeah,
No.
like the three little
Why have I
red
been
dots.
scrolling this whole time?
Yeah, those three, like the red dot
Oh,
there.
another gun.
It typically will jump over like when you
Okay.
see it.
Ah,
Yeah,
here,
click on the red dot below. Go down. There you
here,
go.
dude. Look at you teaching me something.
And then as long as you're at but it's so big that you can't fit it
This is
all on the
huge.
screen.
It's
You
massive.
can move the sidebar and all that, but you're still there. But look at the now look at the trade. Now this is a 11,000 buying power trade.
Mhm,
It's a 20 multiplier, so he's taking in 67 times a 20 multiplier, so he should be taking in about $1,340 in
mhm,
the trap, which is it's extrinsic, so you can see that right there. So
mhm.
1340 in the trap. So
In the trail
1340 on
or the
like
tail.
11. Yeah, so it's like a 12% return
Yeah.
in 6 months, or
And
sorry,
if it
60 days. I'm
falls,
sorry.
yeah, it's 2 months. And if it
Yeah,
falls from here to inside this trap, look at the max profit. Oh, shoot. Where'd it go? Oh
you
no,
clicked
why
on
did this mess
the
up? Oh,
17
I
minutes.
clicked another one. All right, hold on a second.
It's all good.
Long,
You get the point.
short, and then 7 delta is what I'm comfortable doing too. Look at the max profit, $5,000. Now, this has a lower probability of profit. If I push this down to around the 5 delta, see that pop probability of profit go to 81. If I tighten this up, okay, still the same. Little less credit. No, no, that's no. See, this is what I would do. I like receiving more credit, less trap, or you can say, you know what, I'll take on a little less credit initially, much fatter trap profit, much fatter.
And for me, that
Uh,
PDS is going to vary the width of that based upon where the market might be. Right now, you are overbought on the daily and the weekly charts. You're over the 3 ATR on the daily and the weekly chart. Okay. So maybe right now is when you want to go maybe 200 to 300 wide
there you
on the
go.
trap, because we're in an
Boom.
overbought scenario. And
Yep.
then when we're not overbought, maybe you keep that at 200 or 100 wide because you're planning on you can vary it based upon what suits you guys.
Yes, sir. Any other questions? Let's see here. Don, thank you, Joseph, for your openness and willing to share. Hey, y'all, I have learned so much on YouTube University. I'm so glad I found Tom and Income Navigators. I'm just happy if I gave y'all any one good tip, I hope it was worth the hour. So thank you, Tom, for saying that. PJ, Tom, would you agree that if you're diversified in strike and days to expiration, that being too heavy in ES or one underlying is okay? Honestly, Tom, I'm not going to lie. When I found you last late summerish, I did nothing but 112s on ES for like 3 months. I made so much money. Now it happened to be timed well as the market was going up, but I was like, oh my God, this is so easy. I like this one underlying. But then I did get nervous and think, you know what? I need to spread this risk around. But what are your thoughts, Mr. Tom, on different days to
Yeah,
expiration?
and that's
You
how
know, one
that's how you
underlying.
diversify, I think, is by DTE and your strikes. So if you're putting them on every couple weeks, and you have different strikes, different expiration dates, I think that certainly helps reduce your risk. Now, it's not eliminating your risk because you're still all in ES, and it doesn't eliminate a black swan event, but it certainly, I think, spreads it out for you in a nice sell-off mode. Having lots of different strikes, lots of different expirations spread out, I think is totally fine. It's better than putting all your eggs in one basket. So you are diversifying by strikes, by expiration, and if you're mixing strangles or 112s, you're spreading it out by strategy as well. So you can trade one underlying and never worry about it. But if you're
Yes.
comfortable starting to spread out to oil and then maybe gold, and then maybe you want to do something else, you can, but you can stay in one.
Stacy says, can we circle back to your covered strangle? Is the covered strangle and your one DTE put two different strategies? So I call them basically the same, Stacy. But what I do is I'm selling the 0 to 2 DTE at the money puts. If I feel like the market's going to fall, then I might go a little bit further down on the puts. But I'm basically starting the wheel strategy by selling puts until it's signed. Then instead of just selling a call on that long contract, I'm also selling a 16 delta or slightly lower put. So I'm starting my covered strangles by starting with puts, right? So could I go long? Could I just go buy one ES right now, hit the ask, hit the market, review and send, and then which almost clicked, and then go out 7 DTE because I like weeklies. I like weeklies. The further out you go, you get a lot more premium, but it's less theta decay. But you also get further away from the current strike price. So if y'all are very risk averse, if you're watching this saying, Joseph, I want to get as far away from the market as possible, then don't do 7 DTs. But let's just pretend I was long one ES contract right here at 49.15. Then tomorrow, like let's just pretend I got a sign today, and then today is tomorrow. All right, y'all follow me? I'm selling a 16 delta covered strangle because I'm a long one contract and I'm selling 16 delta. See, I'm cool with covered calls. Naked calls have burned my butt too many times. I just don't like naked calls. But this is what I would do if I was assigned today. So if I go back to my positions tab, my strike price is 49.15. I'm only 2 points away. I could go ahead and just keep this $270, which means I'm made over almost $600. I could just go ahead and roll this, close this today for a profit of $202. Go ahead and open one for tomorrow. But I'm going to let it ride a few more hours, y'all. Look, ES is curling up. So I'm going to see if I can get this other $200. But that's what I do is
And how
start
many
by
times
selling
will
the
you
puts
write
until it's
those
signed.
puts?
Sir?
How many times do you write the put? Just one more time after the original assignment, and then you're only doing calls
Um,
after that?
On my trade plan, I say that I'll go up to 4 total
Okay,
long
4.
contracts. Is that too big for account my size? I don't think so, over 600,000. But I would do up to 3 covered strangles, all at 16 delta or lower puts, which means as the market falls, I might get assigned more, but that lowers my cost basis. And now I can sell more calls that are closer to at the money and get a lot more premium. That's just me personally. I'm okay averaging down. I'm not a day trader. If you watch day trading videos on the YouTube, they say never average down, just take your loss and run. Y'all, I'm a swing trader and I'm primarily a premium seller, right? I'm okay taking on some directional risk short term. I'm okay seeing some red. Am I upset that I did this trade this morning and y'all are seeing me be down so much in gold right now? Yeah. But honestly, if I wasn't sharing this, I wouldn't really give a crap. Like I'm okay with this. Because you know what? If I get assigned these on Friday, I'm just going to start selling calls and I'm going to collect thousands of dollars or hundreds at first and potentially thousands of dollars in premium. So I'm okay holding up to 4. So I'm okay averaging down. For most people, it's a mistake. You know what my biggest problem has been is I average down too quick and too big. That's when I got in trouble.
I think too, the one thing you really have to watch for anybody that's looking at this, and Joseph too, is you have to watch the rollover dates.
Yes.
Because if you
Gold.
if you are assigned,
Yeah.
and if you put this on and you
Mhm.
get assigned, and the rollover is Friday, I'm just using it as an example, today, you're going to have to roll that futures contract
Bingo.
over quickly. So you may want to make sure you're also paying attention to the actual underlying days of the futures and not just willy-nilly putting them on because you have crossovers and they do have different pricing and you can take a decent loss on the
Mhm.
roll from one contract to the next. So if you take a look at different futures contracts or for different expirations, just look at MES there. Look at the difference in those two. Now they're not. It's not going to happen right away, but look at the cost of the H4 versus the M4. You're at 49.18 on the one, and the other one's what's 49.79 or something like that. So there's a 60-point difference in those two contracts. So you got to pay attention. Now that you have a while before we get there, uh,
Mm.
but you do have to
Yeah,
pay a
this one
little bit of
goes
attention
till
to the different contract dates of when they
yes,
expire.
sir. And honestly, that's why I did this in my IRA last night. See, if I go back to my activity history for the year and just my IRA, see how I'm up $655. But then I was like, uh-oh, I literally sold a put for today on GCG4. And I was like, hold on a second. That's done on Thursday. So I went ahead and closed it. And I did this one for Friday. And then I've averaged down 1. Now the problem is I can't do no more. I got no more buying power. So this is totally non-income navigator style. Okay. This is just me being a little bit more risky in my IRA because I just have a higher risk tolerance. I'm definitely not telling any of y'all what to do. Eddie, do you care about price action at all or just enter the shorts weekly regardless for wheeling? I like technical analysis. I think there's something to be said. I know when the MACD crosses, it's going the other way. I like 9 and 21 EMAs and I like watching those crosses. But I treat this more as I believe what Tom calls it as a campaign type trade. Guys, you know what most people should just do? Buy SPY and never think about it and literally just buy it every week or every 2 weeks when they get paid. When they get a little bit of money, just buy SPY and put it in. I am totally cool with ES long term. Could it have a 10% correction? Yes. Could it go down even more? Yes. But thankfully, I've also got these layered long puts on. Those layered long puts from the 112s help me. All right. It helps me with that. But Eddie, if I think the market's way overbought and I think it's going to dip, I might just hold off for a few days, right? But I'm treating this more like a campaign. It's like a daily way to bring in $500 to my account, 500, 500, 500 every day. If I go to the ES and let's say I want to go ahead and sell one for tomorrow, it'll be around $500. Boom. At the money, I'll bring in $537. Why is it requiring? Oh, shoot, I'm in the IRA. I was like, why is it double? See, y'all, IRAs, much higher margin requirements, which is, it's just nice that Tasty even lets us do this. Now, I know some of y'all trade on TOS or interactive brokers. I used interactive brokers last year. I love interactive brokers, how they pay so much more money on your cash and all that stuff. It's clunky as hell. When I found Tasty last May, uh, and how beautiful it is to trade options on Tasty Trade, I just fell in love. But I know some of y'all use Thinkorswim or TD Ameritrade or Schwab or interactive brokers, especially if you're international. I love interactive brokers. Can we send Tasty a petition like asking them just to pay us a little bit of money on our cash? Like I would love to get 5%. Interactive brokers paying like 4 or 5% on cash right
Yeah.
now.
Yep.
I would love that, but I hate their platform. Any other questions? Is this time? Like how often do y'all go?
Yeah, let's
Are we done?
we'll bring it to a close
Okay.
here. I think one of the things I want to pop on, I'm going to grab the screen for a moment as well,
Yes.
is in our Discord. Now we do have the contributors corner area that we've established that has Stacy's channel, and Stacy's got 3 trades on today. You got Eddie's channel, and Joseph, we moved you here as well. So there's under the contributors corner now. Joseph has a channel. You can, in this channel, you can create as many different threads. So instead of leaving you here in member trades where we were, I'm going to have you move everything and start posting in this thing here. And you can create multiple, you can create multiple threads from here that you need to. So if you want to drop your, create a sub thread here for, your trade plan, just post that by itself. You want individual trades. If you have some different things you want to cover, kind of like what Eddie's done up here, where he's got some different trades, 2 different pieces. Anything that you want to discuss in here, Joseph, you can add more threads to these. So you can create new posts, I'm sorry, for yourself. So you have the ability to create as many posts as you want here, and each of those posts can have their own discussions. So,
right. So
all right.
guys, I'm going to add one more thing. So the idea behind the forum style that we chose to give to Joseph is so that every single topic could be a new post, right? So that you don't have a run on with 14 different conversations all going on in the same one post. Everything is and Joseph is the only one that is able to create topics within his forum. So he's going to be able to kind of differentiate different topics by creating a new topic for everything that he wants to discuss.
Excellent. Well, before we let y'all go, I'm not Barbara Streisanding. See, I was raised in a Southern Baptist household. My mama would never say bullshit. So she would say Barbara Streisand. I'm not Barbara Streisanding you, but Tom, your YouTube videos completely changed my life. The 112 trade and everything that you guys teach. I'm just so glad to be here. So thank you, Tom. Thank you, Igor. Thanks for everybody watching. If you have questions, feel free to reach out to me on the Discord. But that's it for me, my man. Thank you.
Awesome. Really good stuff today. Appreciate your time. And I appreciate everybody's time jumping on here today. Hope you got some good stuff out. Just trying to bring you some different options, different opportunities. You want to get a little bit more directional. You want to change it up a little bit more. You want to add a little juice to your trades. You can certainly take a look at this. And you can take a look at Joseph's trades. If you don't like selling the at the money 1, 2 DTE, fine. Go out to a 20 delta, go to a 30 delta, sell that. That's kind of along the lines of what we were doing with our coverage strength. You want to start just a little bit lower than that, just to give yourself a little bit of an edge. Fine. You want to go above it? be a little more risky because you want to get assigned and just wheel. It's all good. So come up with your own plans, but Joseph, appreciate everything here. And if you guys haven't checked out his YouTube, go check him out on YouTube. His videos are in here. They'll be in his channel, so you guys can click on his videos, get to his YouTube channel there, which is I was going to pop
It's
it in
Joseph
here.
D. Puckett. Joseph D. It's called Trade. Oh shoot, what is it?
It's Trade with Joseph. Yeah.
Trade with Joseph. Joseph D. Puckett is my handle. Thanks, guys. Y'all happy trading? Stay green and trade small. Okay, don't be like JP and trade too big. Okay. Thank you, guys.
All right, guys. Take care. Thanks, Joseph.
Good job, guys.
Bye.